This video will be talking about the next step after we have done a few payroll entries. This will deal with paying the payroll tax liabilities. And we're going to be using the mountain ski shop again. We used this in a previous video about a week or so ago. And on the screen you see some information and you see a payroll entry already journalized. Let's first of all look over on the right. And we're using the mountain ski shop, as I said, and we are looking into the future. The previous video used a date of January 31st, I believe, 2020. Now we're going a couple months further into the future and looking at an entry at the end of March. So the monthly payroll for the mountain ski shop is the same as it was back in January. The gross monthly salaries is $24,000, so we'll keep it simple. We'll use the same amounts that we had in our previous video. So we have some tax liabilities now. Federal income tax, $6,000, state income tax, $4,500, and FICA tax, which is, as you know, a combination of Social Security and Medicare, of $2,000. These are all withheld from the $24,000. These are things by law that we have to hold out of the employees' paychecks. So we have at the end of each pay period, and this happens to be a monthly pay period, so at the end of each pay period, at the end of each month, we have this entry that you see in the general journal, and we've done these before. So salary expense is debited by $24,000. And the three taxes are credited, which means we owe more money now. These are considered to be liabilities. We owe the money because we kept it out of the employee's paycheck. So we're going to have to pay it eventually on their behalf. And you see the credits over here. Cash is credited as well, and $11,500, you should know by now, comes from subtracting the total of these three credits from the debit. And that ends up with a credit of $11,500 to cash. That's the net pay of that we pay to the employees. Once again, if we add up now all these four credits, they have to add up to $24,000 because debits must equal credits. And we issue payroll checks. Okay? The reference column is filled out, and that indicates to us that we have already posted it, as we'll see in a moment. Another thing on the right that we need to look at, this is at the end of March, and the reason I use March is because this is the end of the third month of the year, which means it is at the end of the first quarter of the year. And at that time, the law says we must pay these payroll taxes. Some of it goes to the federal government, some of it goes to the state. But we need to pay the first quarter payroll taxes. They're due. And that's what this video is about, showing how this is done. Now, what we do not do is pay these amounts, as we'll see in a moment, but we pay the entire quarter, which means 3 months. So let's take a look, first of all, at how this was posted. On March 31, salary expense was debited by $24,000, and in the ledger, this should have been posted with $24,000. Okay, so as I said earlier, these accounts, expense accounts and revenue accounts, are going to show zero balances, and we'll explain more about all of that later, why that happens to be, why that's necessary. But at this point, there's nothing in salary expense until we do this posting. Even though there was a payroll entry in January and February, somehow this ends up with a zero balance. And again, we'll talk about that much later. But the point here is that we need to debit salary expense by $24,000. Okay, this shows the amount of salary expense for this particular accounting period. So 504 is put back into the journal, as you see here, so it has now been posted. The other three have already done, as we'll see. but I want to look at these liabilities. First of all, let's go to the federal income tax payable, and you'll see 3 entries here. And there would have been 3 because these do carry over. They don't close, they don't empty out, they don't show a zero balance like the expenses do. If they're not paid, they're going to stay there. So at the end of January, we withheld $6,000. We did a payroll entry and credited federal income tax payable. We didn't pay it, so it's still there. At the end of February, we happen to have a leap year in 2020. At the end of February, then we have another payroll entry. And again, you see the references here. This happens to be from journal page 16. And again, it's the same amount, credited $6,000. And now this one at the end of March, we just did, and it has been posted from journal page 17, $6,000. It shows now, this account shows a balance, which means we owe $18,000. That's how much we withheld from employees over 3 months. And we're going to pay it here in just a moment. Same happens with state income tax at the end of each month. These are monthly salaries, or monthly payroll entries that we have to make. So each time there's a similar payroll entry that we saw in the journal at the end of January, February, and now at the end of March. These happen to be from 3 different journal pages, but each one is credited $4,500, and we now owe at the end of March a total of $13,500. We've not paid it yet. FICA the same way. That's part of the payroll entry at the end of January, February, and March, and each time we have a credit increasing the liability by $2,000 each month. At the end, at the end of the quarter, we owe $6,000. So now let's go back to the journal, and we will look at this part of the problem. This is the real issue with this video. We made the payroll entry, and we did an entry that looks just like this. We did this at the end of each month. These are monthly payrolls, and they were posted, as we just saw, at the end of each month. And now we need to pay the first quarter payroll, and the first one we will pay on this date will be, we'll just do these in order, the federal income tax payable, okay? And that is debited by how much? Well, if we look into the ledger, we find federal income tax payable. The balance is $18,000. So we don't pay $6,000, we're paying the whole thing. We have to pay $18,000. So that's the debit. The credit goes to cash. We are paying it. Again, $18,000, and let's assume this is check number 901. So let's post this now. Maybe I should type correctly. We go to federal income tax payable and we debit $18,000. So we're at the end of March. Came from journal, page 17, and we debit, not $6,000, the total amount we owe, $18,000, which gives us a balance of 0, and that's what we want. So account 202 back into the journal, and then we credit cash. Asset account. Okay, journal, page 17. You see that we had, as of March 30th, we had an amount of $67,221.50 in cash, and that March 31 payroll entry, that net pay was $11,500. It was credited to cash, so that's shown there. And now we're going to credit $18,000 because that's the amount of 3 months worth of federal income tax that we have to pay, and that reduces our cash balance. Account 101, back into the journal. So that's one of them done, and these entries are done the same way. This time it's state. Income tax payable. And again, this would need to be debited. Let's look in the liabilities to find out how much. State income tax payable. We need to pay the whole thing at the end of the quarter, $13,500. So that's what's debited. Once again, cash is credited by the same amount. That's how much we're paying. And this will be check number 902. Okay, and let's post this one, $13,500 to state income tax payable. Journal page 17, and the debit of $13,500. If we do it right, the balance should be zero. Account 203. So you can see it gets to be repetitious, so it's not that difficult to do. We need to credit cash. We're spending more money. $13,500 and account number 101. So you can see how this works. Let's do the last one just to have it completed. FICA tax payable. Well, we didn't spell it right, but that's okay. So we need to make sure we are debiting the correct amount. It's not $2,000, but we have to look in the liability, and we see that under FICA tax payable, the total amount due is $6,000. So that's what we're going to debit by $6,000. And once again, cash is credited by the same amount. And let's post them. FICA tax payable. J17, journal page 17, and the debit is 6,000, which gives us a zero balance. Account number 204, and cash will be credited. Same date again. Same journal page, and a credit of 6,000. So you see the balances have been reduced again, and the 101 back into the journal. So it becomes repetitious after a while, and it's not that difficult to do, but you have to understand that we're paying quarterly taxes, which means we pay the total balance due, not the 6,000, 4,500, and 2,000, but the total amount due after 3 months. So now we're paying, in this case, the federal government 18,000. In this case, we're paying the state income tax amount of 13,500. That's a check to the state. And the FICA would be, again, another check, and that should be our information there, check number 903, because that goes to a different department of the federal government. So the 3 separate checks. So those are the payment of the liabilities, and that would be done at the end of each quarter. So again, review this if you need to. We're going to have a little bit of practice in doing that, so go back to your course page at this time.